Good morning, friends and fellow traders, and happy Friday. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for March 23rd, 2018. Hey folks, I do these videos as just part of my market preparation for the day. There's nothing particularly fancy about them at all. What I tried to do is I just try to remove my bias on any trading that I'm doing and on any charts, and I try to look at the chart objectively and prepare for what I see in that chart for my day. I believe preparation is far more important than luck. So if you guys find this helpful, could you please do me a favor? Click on that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons. That really helps me a lot. And if you don't mind, if you feel like the video is worthy, please do me a favor and drop a comment. Doggone this trade war that seems to be cropping up right now has really heated up the market. If you remember, I've been talking how we were just kind of sitting on the edge of a cliff. It wouldn't take much to push us over. And while everyone was kind of focused on the FOMC, which really turned out to be very good, the political types decided to shove us over the edge with this trade war. Now, you know, cooler heads will eventually prevail, and politicians will do what politicians always do. If this gets too bad, a compromise will be found. Cooler heads will prevail, and the market will rally. Let's face it, they want to be reelected, and they're not going to doom the market for a long period of time. They will certainly shake up the market from time to time, but they're not going to doom the market. Now, let's take a look at this overall pattern. I'm looking at the diamonds here, and as you can see, we are certainly looking very ugly here. The classic blue ice failure pattern here where we drop through the 50-day moving average. Now, that right now is looking like the potential of a 200-day test could be on the way. And if we take a look and just, you know, throw a few lines on here and things like this, our major support right now is right down here, and it wouldn't be that much of a stretch to think that we're going to reach down in here. This morning we're looking at another gap down as those bears continue to chew away at the market. But look at the possibility. If we come through this support area right here, we could drop all the way into that 200-day moving average pretty easily, and it really wouldn't be that big of a reach considering you know, the way this chart looks. Now, that's about a 600-point move in the Dow. Certainly not something anyone wants to see, but I think everyone can visualize that the possibility does exist. Now, it is entirely possible that we could bounce first, okay? This morning we're looking at a gap down. We could easily bounce back up toward resistance levels. Now, if we bounce back up, notice we have price resistance right here now, and we have price resistance right here. So it wouldn't be that big of a stretch to see that we bounce back up and maybe find a resistance level before resuming to capture that 200-day moving average. When we get this close to the 200-day, that it's almost like the 200-day is turned on will turn on the electromagnet. It just wants to go there, and it'll sometimes draw it right into that average. So keep that in mind. We could be rolling down a little bit further, and be prepared for that. We've got a lot of technical damage in this chart that's going to have to, we're just going to have to spend a lot of time correcting that once this selling is over. Let's take a look at the SPY. SPY doing the same thing here, failing pretty quickly. Only 57 points on the SPX or S&P 500, 57 points to reach that 200-day moving average. And you can see we actually tested that before. here. So it wouldn't be all that much of a surprise to say that we could reach down in here and test that area in the next few days or even weeks ahead. So kind of keep that in mind. Also, we are reaching, if we take a look here, let me just do this real quick. Let me look at the Qs real quick. Qs breaking through the 50-day moving average. The Qs have been the strongest group of the bunch, but let's keep in mind that we have now failed the uptrend and we've dropped through the 50-day moving average. So not a healthy sign, and we're showing a gap down this morning following through on that. Any rally back could be looked at as a possibility of a blue ice failure pattern to move us low. So we'll have to kind of be careful and watch that. Remember, we got resistance right in here as well as that 50-day moving average. Let's take a look at IWM. IWM was one of the last holdouts here, holding the 50-day moving average, but now we have dropped through, and we yesterday actually tested this uptrend, and we could see IWM, react to that today. We'll wait and see, but we are gapping lower this morning, as you can see here, and so we now have all four of our major indexes pointing south, which kind of means that the bears are firmly in control, and we should expect some additional selling. Expect that volatility to remain high. If we take a look at the VIX, we have a confirmed bounce here, and let me go to this chart, a confirmed bounce right off this price support here. We rallied up, pulled back, boom, bounced right up, breaking the downtrend here in the VIX, showing that that volatility is coming back up, and we could expect that to go higher here. So keep in mind that we could see those big price moves, very fast price swings, fast price action, intraday reversals, whipsaws, all of those kind of things can happen. So if you're not an experienced trader or very adept at moving quickly in the market, it may be wise to just, sit on the sidelines and let this settle down a little bit. There will be better days ahead, and we know that the market always comes back, and this will too pass eventually. Keep in mind that our economy is strong. Our economic numbers continue to come in good. Jobs are good. Manufacturing is good. Our companies continue to report good earnings. Labor is good. Consumer confidence is good. And all of those things continue to push that our economy is strong. So this is kind of a politically motivated sell-off. And in that light, just kind of keep in mind that it will eventually end, and we're going to, be rolling into another quarter of earnings here pretty soon, which could certainly inspire things to go higher. So just stay calm, let this happen, and there's going to be great buys when this is over. Stocks on discount, good opportunities to get into trades that were not offered just a few months ago. So could be a really good thing for us overall. Let's take a look at T21 22, T21 22, the 4-week new high, new low ratio. We're down here now in this bullish reversal zone. So that big selling yesterday brought us all the way down here. The gap down this morning, which right now as I'm recording this is not quite 100 points lower on the Dow. Overnight we were down more than 200 points in the Dow futures. So keep in mind, even if we do get a little bit better on the open, we could certainly see a little more selling this morning. And we can remain down here for a little while, as you can see. So keep that in mind as you plan your day. Could we get a bounce on this Friday? Yeah, we absolutely could. A little bit of a relief rally. We could also see additional selling, or just carry us all the way back down to that 200-day moving average to kind of, flush it out and get it over with. Anything is possible, so watch that. But we're in this bullish reversal zone, so you want to kind of stay focused if you're short trades. if you are in a short position, you'll want to watch that fairly closely for the clues of a relief rally to take those profits. And if you're kind of standing on the sidelines and just waiting for those long trades to come back around, also stay focused on that, because we could get that movement happening anytime when we're down here in this area. Just remember, price action can be fast, it could be volatile. So if you do decide to trade long, make sure you're prepared to handle that kind of volatility when you jump into a trade. Okay, let's take a quick look at the economic calendar. Today we have a couple things on the economic calendar that do have the potential to move the market. First, durable goods orders, and those are expected to bounce back. They were a little bit soft in January. They're expected to bounce up strongly today, so durable goods looking good. New home sales are expected to come in very, very strong. So there's just another nice indicator for the market. Consumers are spending. There's money out there, and the economy seems to be strong. If we've got homes being sold at huge numbers like these, then we can expect the economy to continue to look strong and improve. We have a couple Fed speakers here today, and then there's the oil rig count, which is unlikely to move the market today. So on the earnings calendar, we only have 24 companies reporting today, and looking through them, I don't see anything that would be particularly market moving. So we're finally calming down on that earnings front. And next week, there are a couple of days that we have quite a few companies reporting, but we're winding down this quarter, and some of the stragglers are still coming in, but we should see lighter days here for the next couple of weeks anyway, until we kick off first quarter earnings. So everyone, I want to wish you a fantastic day and a fantastic weekend. Protect your capital, stay safe. Watch this market very closely for clues of bounce or reversal, possibly even today, and be prepared to trade wisely. Everyone, take care. Have a awesome weekend, and I will talk to you all very soon. Have a good one.